Welcome to the deep dive. You know, trying to keep track of the US-China trade situation, it really can feel like watching some long, drawn-out sports match sometimes.
It really can.
And actually, that's exactly the analogy used in an analysis we've been looking at, framing it as being in a mid-game break.
Yeah, a halftime almost.
Well,
A pause.
a chance to catch our breath before, whatever comes next.
Precisely. We've been digging into a recent YouTube video that gives a pretty good snapshot of where things stand right now, why we're seeing this apparent lull in, let's say, the escalation, and what kinds of strategic moves we might expect in the second half.
Right. And for you listening, it's obviously a super dynamic situation. So our goal here is really just to pull out the most critical takeaways from this particular analysis.
Yeah, to distill it down.
And we did see that flicker of maybe optimism in the global stock markets, didn't we, when the
Yeah.
U.S. Tweaked some tariffs and announced that 90-day period for talks.
We did, yeah. Bit of a sigh of relief, maybe.
But, and this is crucial, we have to remember, those tariffs, they're still there. Still at 10% on a lot of Chinese goods.
Absolutely. It's not like everything went back to normal. Far from it.
So it's not a full stop at all. Which brings us to a really key question that the analysis raises. After this first phase, this first half of the friction, who was actually ahead? The U.S. or China?
That's really the million-dollar question, isn't it? And to understand this mid-game break, you kind of have to look at how things unfolded.
Okay.
So initially, markets went down, right, when the higher tariffs hit. That was the immediate reaction.
Predictable enough.
But then there was a recovery, a rebound. And this happened after the U.S. adjusted tariffs for countries other than China back down.
Oh, okay.
But at the same time, they increased them specifically on China.
So really pinpointing the pressure there. And this 90-day window, the analysis really stresses this point. It's important.
It is. It's meant to be an opportunity for other countries to, talk to the U.S., negotiate things.
And it did seem to calm nerves a bit, at least for a moment. We saw that U.S. fear index drop a little.
Temporarily, yes. But, and this is a really big but in the analysis we looked at, there's this concern.
Okay.
Is this market bounce just, a dead cat bounce, like a brief uptick before it falls further? Or maybe even a bear market trap, something that looks good but isn't sustainable.
Right, luring people back in before another drop.
Exactly. The worry is that if the core issues, the fundamental disagreements, aren't sorted out in these 90 days, maybe even just 60 days if there's no real movement on new trade rules, well, things could head south again.
So it's less like a ceasefire and more like a ticking clock. The analysis uses this pretty stark image, actually. Calls it a time bomb.
A time bomb, yeah. That needs diffusing. High stakes, for sure.
Definitely. So back to that question, who is leading in the first half, it seems like there isn't one simple answer.
No, it's definitely not clear-cut. From the U.S. side, a big part of the strategy has been trying to get allies on board, right, to present more of a united front in these trade disputes.
Makes sense. Strength in numbers. But what about China's angle? The analysis suggests they're playing a different game.
That's right. The analysis really highlights China's, pretty firm stance. And it seems rooted in what they learned from that first round of tensions back in 2018.
They've been preparing since then.
It seems so. They've had time to adjust. And one argument presented is that China's playing a longer game here. They want to show any future U.S. presidents that starting these kinds of trade fights, it can backfire politically at home.
Demonstrating there are domestic consequences. So it sounds like a real standoff. The analysis calls it a game of chicken.
Pretty much, yeah. Neither side wants to blink first. And, the data does show that direct trade, U.S. to China, China to U.S., it did drop after that first trade war kicked off.
Okay, so that direct channel was impacted.
Which is where China's strategic shifts really come into play.
Right, so if direct trade is down, what are they doing instead? What are these shifts?
Well, they've been strategically moving parts of their supply chains, redirecting things more toward Southeast Asian countries. Think Vietnam, Cambodia, Thailand, Indonesia, Malaysia.
Okay, diversifying.
Exactly. And this has led to more transshipment. Goods going through these countries on their way to the U.S. Indirect routes, basically.
Like finding a detour when the main road's blocked? But surely the U.S. knows this is happening.
Oh, absolutely. The analysis is clear on that. The U.S. is definitely aware. And that's almost certainly why we saw those recent tariff adjustments hitting those Southeast Asian nations.
Closing the loopholes.
Seems like it. The analysis mentioned, like, Malaysia getting hit with 24%, Thailand over 30%, Vietnam even higher, over 40%. It looks like a direct response to stop that indirect flow.
Wow, that's putting serious pressure on those intermediary countries, too. So what was the immediate impact of all this tariff shuffling and the uncertainty?
Well, initially, it caused a bit of a pause in some trade flows. Businesses were like, okay, who's actually going to pay this extra cost?
Yeah, nobody wants to get stuck with the bill. Leads to hesitation.
Right. So orders slowed down for a bit.
But then the U.S. decision to hold off on more tariff hikes that gave some breathing room.
Yes, exactly. It allowed global trade to sort of pick up again,
Yeah.
temporarily at least. And the analysis points out this could actually lead to increased demand for restocking in the U.S. during this pause.
Okay, companies needing to replenish inventory.
But, and here's the catch, they need to source those goods from places other than China because of those existing 10% tariffs.
Which then creates openings for other players in the supply chain.
Precisely. And it cuts both ways. China's also facing higher costs now if they want to import stuff, like raw materials from the U.S., which again might just push more trade indirectly through Southeast Asia. The analysis calls these structural opportunities, meaning like fundamental shifts in how global trade works that could create lasting advantages for certain regions or industries.
Right, not just a temporary blip, but a real change in the landscape. Like the U.S. needing to diversify away from China could create long-term manufacturing demand elsewhere.
Exactly. That's the idea behind structural.
And Malaysia seems to be highlighted here, doesn't it? The analysis specifically mentions potential for Malaysian industries to get more orders during this window.
That's definitely a key point they made. Malaysia and other Southeast Asian countries, too, could see a real uptick in demand as companies look for alternatives to China for the U.S. market, and maybe as China reroutes some trade as well.
It's such an intricate global dance, isn't it?
It really is.
So looking ahead now to the second half that the analysis talks about, what should we really be watching for?
The absolute crucial thing is whether that time bomb, as they call it, gets diffused in these next 90 days.
Whether some kind of deal or new rules emerge.
Right. If there isn't real, tangible progress, well, the analysis suggests we could easily see the U.S. ramp up the pressure again, maybe quite aggressively.
So this mid-game break, it's definitely just a pause, not the final whistle. The chance of things heating up again is very real.
Absolutely. The underlying issues, the strategic goals on both sides, they haven't gone away. This is really a time to watch and see what happens next, what moves are made.
Okay, so wrapping this up then. The big picture is U.S.-China trade tensions are in a kind of temporary holding pattern this mid-game break. Both sides have made significant strategic adjustments, shifting global supply chains noticeably. And these next roughly 90 days are critical. They'll likely decide if we move towards some kind of resolution or head back into more intense conflict.
That sums it up well. The uncertainty about that second half is definitely hanging over the global economy right now.
Which leads us perfectly into our final thought for you listening today. When you think about these big shifts in global supply chains, all this strategic maneuvering by the U.S. and China, what lasting changes do you think this whole trade conflict will ultimately carve into the way international business is done?
Yeah, that's a big question. What will the long-term map look like?
Something to definitely keep thinking about as this whole situation continues to develop.
Indeed. Keep digging into these complexities of global trade, because they really do shape so much of the world around us.
Thanks for taking this deep dive with us. We'll be back with more insights soon.